And it's 1:30 p.m. right here in Lagos, Nigeria. Coming up in the next 25 minutes, National Monetary Fund warns that a prolonged war between Hamas and Israel risks impacting economic activity and inflation outlook for North African countries. North Korea plans to close its embassy in Uganda as part of efforts to raise the operating efficiency for countries' organizations abroad. Plus, new motor vehicle sales in Kenya dropped 12.2% for the 9 months to September. Hello, welcome to the program. I'm Ladi Williams. First off, let's get a check on markets now at intraday, starting with major markets on the African continent. We see the NGX there in positive territory, 0.22% up. That's the trading right now at intraday, right there on the NGX. South Africa on the flip side, that's down 0.55%. EGX 30 rearing back into positive territory with a big move up there. Talking about EGX 30 in North Africa, 3.74%, almost 4%. Another big jump after yesterday's bearish close. We're seeing the EGX 30 back in bullish territory, while in Kenya closed negative yesterday. Again, 1.68% down. Let's get a sense of what's happening in the Middle East now. We'll see major markets there were positive. Let's see the Abu Dhabi index in UAE, both positive. Dubai index, bigger mover at intraday, 2.28%, while the Abu Dhabi index, that was up 0.70% at intraday. Saudi Arabia has not left out positive sentiment, also up 0.67%, while the Qatari index is the lone loser at intraday in the Middle Eastern markets that we track. All right, let's take it to Europe now. I see Germany wants to boost its industrial sector over the next 4 years and is laying out a 50 billion euro tax break plan to make it happen. For more on the plan laid out by the largest economy in the European Union, turn now to Cassandra Sunt right there in Berlin. Great to have you, Cassandra. So 50 billion euros, eye-popping number for one sector. Tell us more about what kind of businesses and benefits are being outlined here.
Thanks for having me, Lottie. So this plan was laid out yesterday and is designed to help businesses and industry cope with high energy prices over the next 4 years. In particular, small and medium-sized businesses will benefit. That's according to the Economy Ministry. Now, the move is part of government efforts to support domestic industry in the face of not only these high energy costs that I've mentioned, but also the draw of incentive programs like the IRA in the United States. So these state subsidies would be aimed at investments, but it's important to note here that it doesn't appear that this paper has been approved by the coalition partners, though Mr. Robert Habeck said that the vast majority of policies within the 60-page plan are undisputed within the three-party coalition. However, one of the things Habeck is calling for is discounted electricity prices for some parts of industry through state subsidies. That's a proposal that's been rejected previously by Chancellor Olaf Scholz.
All right, why is this sector important to the Economy Ministry?
Well, frankly, because it's so big. German industry remains a vital part of the economy, and it employs millions of people. But the kind of industry we're talking about here is heavy industry, which requires a lot of energy. And prior to the full-scale Russian invasion of Ukraine, Germany was a big importer of cheap Russian fossil fuels, which powered the domestic industry here. Because of its size, the sector is really important, and the numbers play it out. Manufacturing accounted for 20% of German GDP in 2021. That's the largest in the EU. Compare that to the next largest economy in the bloc, which is France, where manufacturing brings in about half as much value there.
All right, turning to the markets now. What are investors looking out for?
Well, European shares slipped early on Wednesday as investors digested a slew of mixed earnings reports out of the region from this morning. For example, Frankfurt-listed shares of Alphabet fell by 6.5% after the Google owner's cloud revenue missed estimates, while Microsoft rose 3% after quarterly sales beat estimates. Meanwhile, in the banking sector, shares of Deutsche Bank rose 5% after the lender's third quarter revenue beat expectations. Swedish bank SEB fell 2% even after third quarter operating profit beat expectations. Looking at the markets at the open, a bit of a slide to start the day in Europe. The London FTSE 100 index fell 0.1%, the Frankfurt DAX index down the same, and the Paris CAC 40 shed 0.3%.
All right, thanks for the update, Cassandra Sunt, right there in Berlin. Thank you so much. All right, let's take it to Asia now. See, Asia-Pacific markets are largely up as investors assess Australia's third quarter inflation figures, which will give clues to the Reserve Bank of Australia's monetary policy decision when it meets on November 3rd. See behind me there, we see some green there for the Nikkei, up 0.67% to close. The Kospi index on the flip side is down 0.85%. Other markets we track there in Asia, we see the ASX 300 at Australia, ASX 200 at 0.04% marginal close. They're down, while the Shanghai Composite does close up 0.40%. We see the markets there, investors looking out for clues with South Korean markets, only major indexes in negative territory. That's talking about the Kospi. So investors looking out for forward guidance for inflation right there in Asia. To U.S. markets now, S&P 500 futures was slightly lower today. Earlier, investors digested quarterly results from tech giants from Microsoft and Alphabet. See, futures tagged to the S&P 500, that's down 0.37%, while the Dow Jones Industrial Average futures is up marginally 0.06%. The only green on the screen in the U.S., while the tech-heavy NASDAQ is down 0.58% due to the earnings we're getting from the tech giants earlier today and yesterday. But let's get a summary of yesterday's close from our correspondent, Maria Baird.
The U.S. stock market rose on Tuesday as the Dow Jones was up at 0.6%, the S&P 500 up at 0.7%, and the heavy tech NASDAQ up nearly 1%. Many investors are expecting an avalanche of earnings in the tech industry and other major businesses in the U.S. This could be a sign that the U.S. economy is still on the rise and that it's still stabilizing, despite what we've seen with inflation. Investors are hopeful, even though the rival Treasury yields show growth as well, some of the highest it's seen since 2007 over the past few weeks. This is also unexpected, but investors are hopeful that the U.S. economy is doing better than once appeared over the past few weeks.
And that's our correspondent, Mary Baird, giving us the summary of yesterday's close right there in the U.S. Bringing it back here to Nigeria now, we see business owners and managers list ever-changing government regulations as a top contributor to hostile business environment. For this reason, Stren & Bland, in collaboration with Nigeria-German Chamber of Commerce and delegations of AHK Nigeria, meet to discuss the impact of policy changes and implications for businesses in Nigeria. Take a listen.
A lot of conversations have been held on the approach of President Bola Tinubu in handling macroeconomic headwinds, which, though not peculiar to Nigeria, but requires customized approach for Nigeria.
We gather not just to talk about these changes, but to assess their implications.
Stren & Bland partners and a group of economists call this knowledge sharing, and it's their way to join in. Their perspective is assessing recent policy changes in Nigeria and their implications. It may be hard times, but the seemingly unfriendly situation also opens up opportunities.
The German companies or the European companies, they are restructuring their supply chains at the moment. So it's not just a one-way street what we offer in the services. We try to reach both sides and we try to bring both sides together.
The core of discussions comes during the panel. Founding partner Stren & Bland partners Amala Umeke paints a picture from his observations and interactions and possible window for solutions.
When I talk to businesses, right, and there are a couple of them in this room, one of the questions I ask is, what's your biggest challenges when it comes to regulatory issues? And they'll say, Amala, listen, it's not about the policies itself, but if I'm able to know that if I do A, B, C as a business, that for the next 4 years it will remain stable, I will just build my business around that policy. And when I thought about it, I think that if the necessary investment is made to agriculture, right, and not just investment in terms of laws, investment, but also tackling issues like insecurity, for instance, which is affecting our ability to produce agricultural outputs, that it will greatly assist in growing our economy, and the data is there.
While the agriculture sector may work, the FX shortage is still a challenge.
The falling peg is a situation where you fix a currency within a band that no country leaves its currency entirely to market forces. And that's what we're seeing. I don't know how you talk about predictability, attracting investment. There is no foreigner or Nigerian. Let's not forget the foreigners. Even Nigerians that have the dollars. Nobody's going to put their money down to invest today, because we don't know how much dollar will be tomorrow. But if today we say dollar is 1 to 2,000, okay, it's bad news. But we know it's 1 to 2,000 for the next 4 years, like you said. Then we can plan our businesses and make money. So is that predictability, the lack of predictability, that is hurting investment, both local and foreign.
Policymakers should actually engage consultants, right? Consultants who work in the relevant sectors, so that they can do a proper plan, a holistic plan from the beginning to the end. Understand the implications of this policy. What is the rationale? Are you going to achieve this rationale at the end of the day?
Like I said,
another brilliant conversation with doable policies waiting to be implemented for impact.
An agricultural revolution was a theme at the maiden edition of the 2023 World Coffee and Tea Expo, with a focus on exploring circular economy and regenerate coffee and tea agriculture. So participants who are traders and producers of coffee believe that Nigeria is losing a huge revenue there. The president, West Africa Specialty Coffee Association, Mr. Larry Shegun-Lean, is calling out the youth and women to join the revolution. Take a listen.
If you remember, coffee was one of our major crops in those years, some 30, 40 years ago. But after the discovery of crude oil, and when crude oil became our mainstay in the economy, coffee and other agricultural produce were relegated. So we are reviving coffee revolution, coffee industry, so everybody will be partakers of coffee, and then we need to help the farmers to get into the coffee business better than they've had in the last 30, 40 years. The youth, they have a major role to play in agricultural revolution, because they are the leaders of today and also the leaders of tomorrow. So if you don't engage the youth now to get interested in agriculture, we'll be doing our country a great disservice. So it is very critical. Women and youth, they are very critical in the agricultural value chain. And coffee is such a beautiful, produce that can help the society and then create that kind of employment that we all need for our youth.
I'll take a break now. When we come back, more stories on the African continent. To stay with us. Let's get a check on the global oil market now. It's the energy market. We see, according to International Energy Agency, world fossil fuel demand is set to peak by 2030. In its annual World Energy Outlook, the IEA says peaks in oil, natural gas and coal demand were visible this decade in its scenario based on government's current policies. That's the first time this has happened. Joining us for this conversation now is Wachira Kariuki, Head, Training and Research, Windsor Brokers, joining me from Nairobi. Great to have you on the show.
Thank you, Ladi. Always a pleasure to be here.
So talk to me now, what does this forecast mean for the global energy markets by the IEA?
Right. So the global forecast was released a while back, and it predicted that oil would oscillate between a high of around $90 a barrel and maybe $40 a barrel. What they didn't take into account is the geopolitical issues that would come into play that would completely affect that. They used the assessment based on production, consumption, and stable prices, and the fact that governments were doing different things to stabilize the economy. Saudi was, for the first time, had cut. This entire conversation came after Saudi decided to cut production and reduce the glut that was here in the market. So they did what they thought was best, made the decisions they could at that time. But geopolitical forces, as usual, have come in and completely changed the game plan. So governments right now are trying to do what they can best with what they have in their coffers as of now.
And what kind of policies can African governments put in place to, benefit from this forecast?
Right. Yeah, fantastic. Good question, Ladi. So governments are different people. For example, it depends on what end of the stick you're holding. You have production countries, Saudi, of course, Canada, and a few other countries that have significant reserves. Then they'll probably stand well to hold the supply and drill less so that the value can continue increasing. If you're a consuming nation, like most of Africa and most of the countries in the BRIC zone, for example, then I strongly suggest they start buying huge amounts in reserve, and preferably in their currencies if possible, or at least shoring up their reserves, because we don't know how far this thing could go. It's been oscillating between a high of $90 a barrel, $92 a barrel, and a low of $78 a barrel. So we need to see it hit a high of 89.55, yeah. So there's a bit of instability, so each government to his own. But for government policies, I would strongly suggest they start shoring up on their reserves and their capacity to purchase that fuel forward as far forward as they can.
All right, let's get a check on the oil market prices now. Seems to be pressured by selling activity. Do you think oil prices will go down lower, in the near term from here?
Good question, Ladi. So on the daily outlook, right now we're at a price of $83.86 per barrel. There's a very strong support at 82.79. It's a daily and a weekly support, right? That's just a technical aspect of trading, analyzing a chart on oil, right? So it's called a double bottom. It's a candlestick formation, which simply means once the price hits that particular level, it hits what is called a very strong support. It has done that 3 times, rebounding off that particular price, and it hit that price, strangely enough, yesterday. All right, and as such, today there has been a slight uptick, and we expect that uptick to continue for the next couple of days because that support has not been broken in over 3 weeks. But of course, should that support be broken, then it's free fall. Oil could drop up to say $60 a barrel, or they are about $80 a barrel, because right now we're at 83.88. My technical analysis means it's going to bounce back to at least $87.2 a barrel, which is a segment and the zone it has been trading in, between $89 a barrel and $82 a barrel. It has not found any strength based on demand to break the top or any particular supply to break the bottom. It's playing in what is called a technical zone of $80 a barrel to $89 a barrel. We wait to see if there's going to be any strength to break those particular resistances. As at now, those are the technical aspects of it. It's definitely an uptrend. The question is whether it's going to break the upside or hold on the downside. So we are watching and seeing whether events like the Hamas war is going to trigger any unusual demand and supply issues. Mr. Ladi, sir.
Right, and definitely I know traders will be watching out for that double bottom bound to see which way it goes. But what are you seeing that could drive sentiment in the oil market this week? We're at midweek now. What are we seeing for Thursday, Friday?
Definitely geopolitical issues. It's not going to be driven by technical issues. Geopolitical issues, the president of the US was in Israel. There was a bit of stabilization. The Saudi government has also issued some few declarations regarding their support or the lack of it towards that particular Hamas-Israeli conflict. Their tool of trade, obviously, is oil. They could seriously detach and delink their production from Israeli war, thereby mess with the supply of oil, right? And they could use that as a weapon, right, in the geopolitical conflict, and that could easily flip things. The moment Saudi gets pulled in that particular political escalation, then definitely we'll always have a change in price. So we are watching and carefully seeing who gets pulled in that crisis, because for sure it's going to affect oil production and the price by extension.
All eyes on geopolitics right now. Always great to have your perspective, Wachira Kiruki, Head Trading and Research, Windsor Brokers. Enjoy the rest of your day.
Fantastic.
Thank you.
Thank you, Ladi. Always a pleasure. Bye-bye.
All right, let's get a check on all the stories now. See, the International Monetary Funds warned that a prolonged war between Hamas and Israel risks impacting economic activity and the inflation outlook of neighboring countries such as Egypt, Lebanon, and Jordan. This latest economic regional review was published before the war. The IMF projected economies across the Middle East and North Africa would expand at a slower pace of 2%, down from its previous forecast of 3.1%. The Washington-based fund is concerned about the tragic loss of lives, but also destruction and reduction of economic activity in nearby countries Uncertainty is acute for tourist inflows, and investors are going to be shy to go to such a place, and definitely the cost of insurance if you're trying to move goods around there. So that's what the IMF is seeing for those areas. Taking it out to Uganda now. North Korea plans to close its embassy in Uganda as part of efforts to raise the operations efficiency of the country's organizations abroad. North Korea's ambassador to Uganda announced the plan during his courtesy call to Uganda's President Yoweri Museveni. The exact reason behind the North's planned embassy closure in Uganda is not known, but experts say it could be related to economic difficulties caused by prolonged global sanctions on North Korea's nuclear and missile programs. And now to East Africa. See, new motor vehicle sales for the 9 months to September dropped 12.3% compared to last year. Latest data by the Kenya Motor Industry Association shows deals in North Country. The country sold a total of 8.71 units between January and September, compared to 9,936 units sold during the same period last year. The drop comes in the wake of a falling shilling, which has lost up to 20% of its value to the dollar, making imports costlier. This, coupled with the new 35% import duty that came into place in July, has pushed up car prices. And Africa should not be so anxious to solve global issues, but find solutions to their problems first. And that's the view of Adebajimo, President FinTech NGR. He was a guest on Business Morning earlier today. Take a listen.
Yeah, in the fourth and fifth industrial revolution, Africans have an opportunity to participate. Yeah, and this is where that phrase, Africa, solving global problems. I think that's a great phrase. But I would rather say, here's Africa solving Africa's problem, but leveraging global participation and global collaboration. So we have less than 100,000 developers in the country as a whole. And probably anyone on a scale of 1 to 10, anyone that hits 6 or 7 is Japad or Japarin, or somewhere like that. That means, one, we have to develop more developers for our own local consumption and growth, and of course, have more to go out as well. And I think, without a doubt, what has been very encouraging is that we've seen regulators come into the fray, over a period of time. And that's a very, very positive thing. You cannot have a tech ecosystem, without regulation. You're back to the wild, wild west. It becomes lawless. We have to protect investors. We have to fight against anti-competitive behaviors, and create, if you like, an environment that fosters growth. And you can see a number of that. So take the CBN. They've worked very hard to now build these sandboxes that we're seeing. Even innovation around e-Naira is a very positive thing, regardless of what people may or may not think about it. So all of those are very essential building blocks, in making sure that the fintech ecosystem is one that is stable, facilitates financial stability, and gives confidence to the consumers who are in that space. It also ensures that bad actors are actually checked, because we cannot be naive. When people hear finance or money, you will get bad actors, whether in terms of taking people's money away or not paying back money that they owe.
All right, that was Adebajimo, the President FinTech NGR, earlier on Business Morning. So that's the show today. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can watch all our production. You can also visit www.channelstv.com for more details from me and the team right here at Lagos HQ. It's bye for now.